Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9, our morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now with news that the ASB Bank has cut its 2-year fixed mortgage rate to 8.95% from 9.2%. That's because of the cut in the official cash rate by the Reserve Bank yesterday. The difference here is that ASB's business is dominated by mortgages, and it's likely to be the first bank and maybe the only bank that cuts its mortgage rate after the Reserve Bank's move. That's because it has a large number of mum and dad investors who put money into term deposits. You may ask, why does this matter? Well, part of the reason why interest rates, wholesale interest rates, have risen internationally and then been passed on in fixed mortgage rates in New Zealand is that New Zealand still borrows a lot from the rest of the world to fund its mortgages. But some banks borrow more from the rest of the world than others. And ASB, we think, is one of those that borrows a little bit less than the others. It turns out ANZ National and BNZ have both indicated that they're unlikely to cut mortgage rates. And that's because of higher international funding costs in the last 3 months, because of the credit crunch has come back with a vengeance. One of the reasons too that Reserve Bank Governor Alan Bollard said yesterday he had to cut rates was because of these higher international funding costs. And that was likely to be passed on to consumers in higher interest rates. So part of the reason he cut rates yesterday was to reduce the size of the increase in rates that some consumers would be having. As if to reinforce this, the BNZ yesterday quietly in a public notice in a newspaper announced that it was increasing its personal and business overdraft rates by 25 basis points. I'm Bernard Hickey, that was 90 at 9 for interest.co.nz.